Opening today, we're diving into The Intelligent Investor, a timeless book by Benjamin Graham, known as the father of value investing and the mentor of Warren Buffett. If you've ever wanted to learn how to invest wisely and build real wealth, this video is for you. Intro about the book. Published in 1949, The Intelligent Investor teaches how to invest with discipline, patience, and logic, not emotion. Graham's approach isn't about hot tips or market timing, but about long-term strategies that protect you from big losses and help you achieve steady growth. Key principles from The Intelligent Investor. 1. The difference between investing and speculating. Graham emphasizes an investor analyzes and makes decisions based on fundamentals, while a speculator bets on market movements. If you want to be intelligent, focus on long-term value, not short-term guesses. 2. Mr. Market analogy. Graham introduces Mr. Market. Imagine the stock market as a moody person who offers you prices every day. Some days he's overly optimistic, other days overly pessimistic. Your job? Be rational. Buy only when the price is attractive, sell when overpriced, and ignore the daily mood swings. 3. Margin of safety. This is Graham's most important principle. Always invest with a margin of safety. This means buying stocks when they're undervalued, giving yourself a cushion against mistakes or market downturns. 4. Defensive versus enterprising investor. Graham divides investors into two types. Defensive investor wants minimal effort, low risk. He recommends index funds, diversified portfolios, and conservative investing. Another enterprising investor, willing to spend time and energy researching undervalued stocks, small companies, and special situations. 4. Don't try to time the market. Graham warns against trying to predict market highs and lows. Instead, develop a consistent strategy and stick to it through ups and downs. J. Value investing philosophy. Buys companies with strong fundamentals, low debt, solid earnings, and trading below their intrinsic value. Hold for the long term and be patient. Either 7. Emotional control, fear, and greed to destroy investors. The intelligent investor stays calm, avoids herd mentality, and sticks to the plan, even in volatile markets. Conclusion wrap. To sum up, the intelligent investor is patient, disciplined, rational, and focused on value, not noise. Whether you are new to investing or already in the game, Benjamin Graham's wisdom will guide you to long-term success. If you found this helpful, don't forget to like, share, and subscribe.